Hello, everyone, and welcome to our second episode of Ahead of the Curve, a podcast brought to you by Loxy Technology, where we're exploring the future of trading, risk management, and market evolution. I'm Laura McLean, and in today's episode, we're diving into the world of asset-backed trading with Nima Safaian, co-founder of Quantum Intelligence. With experience spanning trading, optimisation, and risk management across major energy firms, Nima brings a wealth of knowledge of how companies are rethinking their approach to trading physical assets in today's markets. From navigating market dislocations to restructuring trading desks for efficiency and resilience, this episode explores how firms are adapting to shifting commodity cycles, new market entrants, and regulatory pressures. If you're in trading, risk, or commercial strategy, this is not one to miss. So thank you so much, Nima, for joining us today. It's great to have you with us. I've touched a little bit on your background, but it would be great to hear it from you, and I'm sure our listeners will very much appreciate that too. Would you mind giving us a bit of an intro about you and your background and your role now at Quantum Intelligence?
Sounds good, Lauren, and thank you very much for inviting me for this chat. So a little bit about me. Started my career in energy, I think more over 20 years ago. So started initially as an engineer, working in the power industry in Ontario, Canada, few years into it, I kind of realized that my passion is actually energy markets, not the actual engineering part of the energy. So I went back to school, got an MBA, and started my sort of, I guess, the second phase of my career in energy trading and risk management in 2009. That's right after the big economic crash. So I started my career with BP's integrated supply trading in Calgary, somewhat, a bit of a accidental sort of career move. I kind of come originally from Toronto, Ontario. It's a major financial center. But then, over the years, I would go to Calgary for skiing. So, I always wanted to move there for a few years, and 20 years into it now I'm still here in Calgary. No longer with BP, obviously. Changed careers or changed companies few times, but always in the area of energy trading and risk management. So post BP, joined the bank, helping them with one of my current partners. We help the bank to set up their commodity trading desk, and then post that moved to a company called Cenovus Energy, where we're helping to build their asset-backed trading operation. And then as of a year and a half ago, myself and two other partners, we started Quantum Intelligence, and since then we grew rather rapidly. So we currently operate in US and Canada, and we are about to open our Dubai and Singapore office. So a little bit around what we do. So Quantum Intelligence, we really try to help. I mean, there's a lot of demand and interest by many physical producers of energy and commodities, and as well as the ones that are in the business of moving commodities to do a little bit more in terms of gaining in terms of doing optimization around their assets. So everybody wants to have asset-backed trading operation, but then a lot of companies don't know where to start, or they don't have the resources to actually execute. And we basically help them both in terms of how to plan around asset-backed trading, i.e. the advisory part, but also we have kind of realized that it's really the plan is not enough. You don't want your product to be a slide deck. You want that to be a capability enablement. So we actually partner with them and help them build key areas that supports asset-backed trading. Um, that could be on the market analytics side, could be risk management, could be governance, could be even like how to set up your book structure, your trading desk, and what sort of competencies you need. So we have a bit of a holistic approach to this, and I guess we're going to get into it around what that means throughout this podcast. But really, that's what we do, and a lot of our sort of partners and staff and advisors are ex sort of traders that come from likes of BP and Exxon and Shell, and they basically bring a lot of experience in terms of having done this in the past. So it's not just theoretical knowledge; it's practical on the ground skill sets that we bring to the companies.
Yeah, I think that's so valuable because I think a lot of firms hit this nightmare story of consultants in to their firms and then giving a lovely slide deck, but not actually helping follow through with the implementation. So really great to hear that you kind of help that end-to-end solution kind of go through. So could you share a bit more how your firm approaches other firms and helps them optimize their asset-backed trading and what that kind of means and looks like for them?
Yeah, so this is actually kind of goes back to what asset-backed trading is. I mean, in reality, I mean, there are different ways to explain it, but I kind of want to maybe explain it, and it might sound a little bit mathematical or theoretical, but really I think sets the framework around what it is that you do when you do asset-backed trading. So really, when you think about your energy assets, I mean, you can think about them as like let's say you have an oil producer or you own a storage. You can think about it in terms of the volume of the commodity that you produce or you move. That's one way to think about it, and which is fine. A lot of companies that are in this business, they're more interested in terms of being the best in terms of producing the volume at the lowest cost. They don't really care about, the what's called the price exposure of their commodities. They care about the volumetric exposure, and that is, I would say, majority of the players in the market. But then the other thing is assets. When you think about them, assets are in some ways can be described as real options. And when you think about it, when you think about options in a financial term, option is a contract or an instrument that gives you the right but no obligation to own an asset. So let's say you have a refinery or a power plant. It's not that you have to produce power all the time.
Yeah.
You have an option to produce power at the time of your choosing. And what you do when you do that is you're basically capturing a spread between a power price and, let's say, a natural gas price. So effectively, your power plant is a call option on a spread
Okay.
price. So if you think about it that way now, there's a whole different framework and activities that you want to do around the assets. So asset-backed trading is really treating your assets like a call option that they are, So, but that comes in, unlike, for example, the financial options, there's not a lot of liquidity to be able to monetize that financially. So you need to come up with ways that you basically capture the optionality of your assets through your operation. And really, when you think about it, optimization around your assets, that's all there is uh, uh, your ability to capture the non-linearity and the optionality of the assets at any time. When you think about it from a historical perspective, most companies uh, came to this realization maybe 20, 30 years ago. Initially, when they started, like, for example, I mean, company like BP or Shell, when they started building their trading operation, it was mainly around the risk managing their volumetric exposure because they had a mismatch between what they produce and what they consume. So they started creating these trading groups to basically manage that risk. But over time, they kind of realized the benefit of owning the assets and optimizing it a certain way, i.e., looking at it as a call option on a key spread. But then over the history of this, then they realize, okay, well, some of these assets, not only they provide you the optionality, but they provide you tremendous amount of information advantage around the key markets. So that information advantage is essentially a moat you create around your profit center because it's very hard for everybody else to come and replicate that business model. So it gives you a sustained advantage in some key markets. So all of a sudden, this from risk managing the risk of your price exposure to a certain commodity, length or short, all of a sudden they have realized that there's a lot of alpha, quote unquote alpha, they can capture in the market because it because of the properties that these assets have. In some ways, though, all you're doing by managing your assets are you're effectively trying to skew your risk reward relationship a little bit to your favor. And if you do that all the time across all of your activities, now all of a sudden you have a sustained advantage in the market. I don't know if that exactly answered your question, but it's a bit of a brief history of the asset-backed trading.
That was really interesting to hear because I don't think a lot of people would be necessarily familiar with that. So let's dive into over the last decade. How have you kind of seen market volatility, regulatory changes, and maybe supply disruptions transforming the way firms approach this form of trading?
Yeah, so this is interesting. I mean, kind of building on the previous example, one of the things that actually, like when you actually look at your assets as a call option, one of the things that happens when market volatility goes up is the value of that optionality also increases. Um, you know, um, and that is really the case with in terms of owning the assets. That's why when you see when there are market disruptions, like let's say COVID is a good example, the only way that you could benefit from from the impact that COVID had on, let's say, oil prices, you basically had a massive contango in the market. The only way that you could really monetize that, aside from taking tremendous amount of risk, was actually owning inland or waterborne storage, like i.e. Ships or tankage in places like Cushing. You would have basically got a massive payoff if you actually own those assets. So companies kind of realize that, when you have these market dislocations, the only way to either protect your downside or capture the upside is really owning these assets. So you kind of see a big trend even by some of the historically trade shops that were in the business of moving physical commodities is investment in ports, storage facilities, actual physical assets, some production assets, refinery assets, because they kind of see that benefit of owning that call option on which is kind of increases in value as volatility in the market increases.
On the back of that, so why do you, in your opinion, do static approaches to asset-backed trading fall short in environments like today, where like you have the likes of COVID or other variants in the market that's going to drive that volatility? What's the biggest pain point you're seeing firms face at the moment?
Yeah, I would say from a pain point perspective, like one of the biggest challenges, like in terms of, I mean, in some ways, like you operate your assets to some extent dictate uh, the degrees of freedom you have in what you can do. For example, if you have a geographically located in one area, that is the area that you can operate in. However, though, it doesn't mean that you cannot change stuff. You can change your strategy. And in a world that, your underlying market changes around you, for example, if you're a refinery, if you're a sort of, you have a if you have a network of gas stations, your sort of the trend is for more people buying EVs, and your gasoline demand drops. So you have to be nimble, and you have to figure out how to change your strategy. And in order to do that, though, some of it is constrained, but some of it is all dependent on your capacity to your effectively your staff and your knowledge and how you can operate these markets. So I would say skill set gap is one area that is one big factor that's preventing many companies from either becoming better in terms of optimizing and trading around our assets, and also uh, does it does not give them a ability to transform aspects of their operation as the market condition changes. So building that the capacity, the knowledge base is actually a key sort of success factor for a lot of companies. And there has been, I mean, over the years, what has happened is, as the interest for asset-backed trading has gone up, but the uh, many of the people with deep expertise have left the market. In some ways, there are other industries that are a lot more interesting for people coming out of the universities uh, to join. Like, for example, we have the AI revolution. A lot of smart sort of grads are kind of more interested in Silicon Valley and tech, and they sort of are no longer interested in, I guess, 20th century sort of world of, moving commodities. So that has been a bit of a two shift. While the interest has gone up, the industry's ability to replenish the talent pool has gone down as people have retired.
Oh yeah, I actually had a very similar conversation with Gary a few weeks ago, who said a very, very something of pretty much the same sentiment, that what we're seeing is a massive skills gap in the industry in general, because people are retiring, and we're not attracting the talent that we need. So yeah, completely agree with that. So in terms of kind of like working around this, what kind of strategies are you seeing firms kind of undertake to optimize like their kind of approach to asset-backed trading and things like that?
Yeah, so in terms of talent gap, it's interesting because we are actually in that business ourselves. So we see that among a lot of our clients. There's a bit of an openness to outsource some of the gaps. Like, for example, when we started Quantum Intelligence, I really I mean, when you start a business, you have hypotheses around what works and what doesn't. And frankly, I never thought the level of openness companies have to outsource their some of the key activities to where the talent is. So, for example, I mean, one of the things we do is we have access to deep experts, in very specific area, could be on the front office trading, or could be middle office. We even have expertise in terms of how to bridge the gap, bridge the um, um, accounting, for example, P&L to a mark-to-market P&L. It's a very specific niche skill set that you need to have in order to run a smooth trading operation. But it's not something that you can go and hire somebody, or you could hire somebody. It's going to be very expensive, and that person is going to spend probably all of their hours doing that. So the solution that we offered was, it's like, okay, well, we have that expert, let's match that up with a young, talented sort of analyst, put them together and offer that as a package to our clients. And initially the idea is like, are they going to be open to that? Because that's a core function that they're outsourcing, and there has been a lot of openness. So I think the idea is that companies are realizing the gap, but they're thinking creatively around how to bridge that talent gap. And some of that is really outsourcing that to where the expertise reside. And that has been, I would say a big shift in terms of the thinking. So it's no longer, I'm going to build everything in house. It's like the same way that I outsource um, my IT platform, I can outsource some of my core functions as well. And that has been, I think, the way that these companies are trying to manage that talent gap.
Okay, amazing. Yeah, I mean, you see it so often how many people are kind of tapping other teams. I think that's kind of like a really nice thing about the industry. There's so many synergies between people, and people love to leverage each other's skills. Kind of flipping the script a bit, and kind of looking towards technology and data. How have, in your opinion, advancements in data science, predictive analysis, and automation improved the way firms optimize their trading desks and physical assets?
Yeah, so that has been the biggest sort of shift. And in some ways, I would say a lot of companies haven't really caught up uh, very well. There has been a lot of advancements in terms of sourcing data. In the sort of hedge fund world, that's called alt data. Everybody says alternative data. In a way, it's a way that you can kind of get market insights where it gives you an edge while it's not commoditized data. So there has been a lot of that, in some ways, like the advent of data science and that becoming popular has opened up a lot of room in terms of the what's called pre-trade analytics, in terms of understanding market dynamics. In some ways, that has resulted in, as we are kind of explaining earlier, assets give you a market edge because you see flows that others might not see from a physical perspective. But now with some of these more advanced data tools, maybe that advantage is no longer as big of an advantage, meaning others can proxy effectively what's going on in the market using that alternative data set. So for example, now there are ways that you can track cargoes in near real time. So you no longer, owning a port and having access to a port is no longer is that big of an advantage. Or, you can kind of look at essentially the your various storage facilities, and you know how much crude oil is in Cushing storage at any given time. So that advantage is gone, or has been reduced. But where I would say there is a lot of opportunity is that as you kind of set up your asset base, you know, the other thing to think about is like, there's one thing of optimizing single assets, let's say single storage facility, or single production. So you gain some advantage there, but then the best way to think about how you arrange these assets together and manage it as a portfolio. And that complexity and having your asset sets as a system and looking at managing it as such gives you additional sources of advantage, because as these assets work together in a portfolio, it could be a, for example, marine facility linked to a storage facility, to a pipeline. If you work them in concert with each other, make decisions from a value chain perspective of a portfolio of assets versus each asset individually, there is an advantage that you can gain. In system thinking, they have this concept of emergence of value. That means that effectively, if you put three things together, the sum of each component is much more valuable than actual each component if you sum them up. I don't know if that makes any sense. In essence, it's a portfolio effect. But in order to do that, you deal with a lot of complexity. So individuals, a trader or one person cannot do that by just kind of using their brain. You need more sophisticated tools. So there has been a lot of, I would say, interesting sort of portfolio management tools that have been developed. A lot of it is in the power sector because of the complexity of managing a portfolio of renewable assets and a let's say gas generation and a battery storage in together. That basically you really need to have a proper model and tool, and more sophisticated tool to model it, to value it, to manage it. But that is also making its way into the world of other commodities, and that's kind of the area of our interest, and we see a lot of potential there to have more sophisticated portfolio tools that essentially assist the traders to make the optimum decisions. And along with that, there's a lot of, obviously, with AI and reinforcement learning as a sort of method of kind of almost like trial and error and dynamically optimizing certain decisions, it really adds to that capability. So there is a lot of excitement around it, and there's a lot of potential.
Okay, awesome. So kind of following up from that, so apart from portfolio tools and embedded like AI solutions potentially, what, in your opinion, does a modern asset-backed trading team and optimization team look like to you? Where do you kind of see that going?
It's kind of interesting. That's an interesting question, because really, at the end of the day, I would say, the modern sort of asset-backed trading, there are aspects of it that is very much anchored to like foundations of how you set up a team. And these are not necessarily, there is a whole technology aspect and all the exciting stuff, but there is also a sort of foundational aspects that anybody needs to consider, and that are the basics of it. In some ways, like when you're setting up an asset-backed trading, you really have to think hard around what problem that you're trying to solve from a overall corporate strategy. Because at the end of the day, the companies that set up asset-backed trading are not this is not their core business. They're basically using this as a tangential business. Sometimes they think about it incorrectly, because they kind of almost think about, okay, well, we have a core business, and then the trading operation is a revenue center alongside that. I think fundamentally, if you do that, now you might gain some value from doing asset-backed trading, but that is limited value. You have to really think hard around your overall strategy and how does asset-backed trading reinforces that strategy. So you have to kind of almost like think about this as holistically as possible. After that, I would say it would become like a question of, okay, well, how do you allocate value between asset-backed trading and your uh, core operation? So that you incentivize people to act the right way in terms of generating value. So there are aspects of that are kind of foundational, but then after that comes the issue of skill set. And one of the other challenges that we have kind of seen is that people uh, pay a lot of attention to bringing the right trading talent, but they don't really think about their support functions. You know,
Mm.
you need to, in order to be able to do asset-backed trading, first you need to measure your risk. So you need to have a proper ETRM set up. You need to have proper transfer pricing, book structure. Um, you have to have right tools that are more agile to kind of get your daily process going. And then after that, maybe there are areas that you can improve from an analytics perspective, and bringing in more advanced AI tools. But really, like, there is no way that you can skip over a lot of those fundamental building blocks. And I think that we see that being a big challenge. Everybody wants to fast track. It's not as easy as that. You go as fast as your organization can handle, and everybody needs to learn as they go, and it's not always that easy to bring that learning, make it as quick as possible.
Okay, yeah, that was a really great answer. It's really interesting to hear kind of your perspective on that. Kind of pivoting a little bit away from that again, if you could give one kind of piece of advice to either a commodity trader or a hedge fund looking to improve their optimization strategy, what would it be?
Well, so this is kind of maybe somewhat embedded in the previous answer. I really think that at the end of the day, in order for you to improve, this is in some ways like asset-backed trading, unlike other types of trading where you really have you know could find an edge in the market and capitalize on it, put on big positions, have a massive payoff 1 year and maybe not so much the year after. It's a slightly different approach. It's more akin to a marathon versus a sprint, meaning that really at the end of the day, when you want to succeed in asset-backed trading, these are all small improvements to all decision-making process. Your ability to close, some risk that you really don't have a view in the market. It could be that you make a small adjustment to how to a contract that you have, like a supply contract, where you gain a little bit more optionality on the supply. It's a bit of a slow process, but it's a systematic process that you have to go through. So meaning that it's really a business of creating an edge by improving your decision quality slightly, but do it across the board. And that is really the key to getting this done. In some ways, it doesn't, when you arrive and when you actually have a fairly robust operation, it doesn't even feel like that because you have done that throughout. And
Yeah.
people kind of question, it's like, oh, what is the value of doing all of this? But the reality is you have to compare yourself today versus what it was maybe when you started. So it's a bit of a I kind of, the analogy of maybe a sprint versus a marathon is an analogy that I always use, which is really one type of thinking versus the other, and this is more of a, you know, effectively improvement to decision quality at scale. I would describe
Oh, I
it.
like that. It's often we hear kind of like nightmare stories of people being a bit too myopic with their operations and not really seeing the long-term value of it. But yeah, that was really, really great advice. And lastly, to kind of like round things off, I have one more question for you. So are there any kind of markets at the moment that are exciting you? We've got a lot of geopolitical uncertainty, a lot of market shifts that are generally happening across the board. Are there any markets you're particularly bullish on? Any commodities you're like particularly excited about?
In some ways, I actually like boring markets. From a value perspective. There's a lot of excitement. I mean, obviously, massive amount of shifts in the power market, especially in US, as we have a lot of renewables coming online. There's natural gas market that is fairly, I guess, topical in Europe specifically, especially with some of the geopolitical events. But for me, actually, some of the markets that are quite exciting and untapped are markets such as bunker fuel,
Mm.
actual like gasoline. In some ways, when everybody thinks about this, they think about, okay, well, what happens if transition happens? People stop driving cars, so we should exit these markets. My
Mm.
sort of view is that during transition, where there are dislocations as a result of that transition, this is where the opportunity lies, from a commercial perspective. Meaning that if you have good setup and you have, right talent set and, right tools, these are the these are the times that you can benefit from the volatility that comes from that big pivot in terms of the energy demand. So really to monetize, in some ways, to monetize energy transition, for example, you could almost like create the entire business model around, focusing on legacy fuel and setting up your asset set to capture the benefit of being the commodity short in these markets. So in some ways, like I kind of see this as more exciting and from a risk reward perspective than the sort of the newest sort of technology in the horizon, which is exciting too. But I would say, don't forget the
This
other
is more
side
so.
of it. The other side of it, you can, as commodity traders, you can make money on the way up and on the way down. So don't forget that. So that would be
That's a
my
really
only advice.
fantastic way to put it. It was so lovely speaking to you today, Nima. This is like packed with insights. I've personally learnt so much. I can only imagine what our listeners will take away from this.
No, I really appreciate the opportunity to talk, Lauren, and no, fantastic. Yeah, it has been a lot of fun.
So that wraps up today's episode. A huge thank you to Nima once again for sharing his insights on asset-backed trading, market evolution, and the strategies firms are using to stay competitive. The landscape is shifting fast, and as we've heard today, the firms that optimize their trading desk, leverage real-time analytics, and rethink their commercial strategies will be the ones to come out ahead. If you found this conversation valuable, make sure to subscribe and stay tuned for more episodes where we speak with industry leaders shaping the future of trading and risk management. And if you want to continue the conversation, connect with us at Loxy, and we'd love to hear your thoughts. Thanks for listening, and we'll see you on the next episode of Ahead of the Curve. Bye for now.